Now, actually getting a list for people is pretty easy, right? I mean, you can get a list of the 4 major areas, the 5 major areas you need to deal with. And what we try to do is to be programmatic in laying these things out. For example, the first one is, no surprise, is financials and cash management. How to manage cash. A lot of clients don't have a 13-week cash flow forecast. You need to put that in place. You need to understand how much cash you're really going to need. And you need to recognize that when we get into the downturn, your volumes are going to change, and so your requirements are going to change. But you really need to manage cash and manage it with authority. You need to conduct meetings on a weekly basis that tells you where you are. When we get engaged with, we do a lot of turnarounds, and so when we get engaged with a client, no surprise, there's a lot of debt on the business, and cash is in short supply. So as the slide says, cash is king. You want to have manage the AR and AP closely, manage it to terms, and understand your debt. And you're going to have a great opportunity here to go out and either reduce or renegotiate your debt. When the downturn comes, it'll be more difficult, and you may not be as attractive as you are now. The other thing is that we find is companies don't conduct regularly scheduled P&L reviews where the control function or the CFO comes in and talks about the performance of the business this year, year to date, compared to last year, and some causal analysis of why the performance is. You're going to really want to manage your business closely in a downturn. Sales organization comes in and says why we're ahead or behind plan, and operations talks about why they are where they are, what their issues are, and so forth. The other thing is what's critically important is you need to understand profitability. A lot of clients we get engaged with, and I'm sure you have this experience as well, don't really understand where they're making money. What products are making money, what are not. In fact, we had a client recently down in Houston late last year where we went in and did an analysis of their profitability, looking at contribution margin, and products that they thought and divisions that they thought were unprofitable were actually profitable, and they were ready to kind of slow them down, shut them down. So a lot of companies don't understand where they make money. In operations is about efficiency and effectiveness. And so a lot of organizations don't have performance metrics. You want to put some basic performance metrics in place if they don't have them. You want to get the company in a controlled position where you know exactly how it's performing throughout the whole company, but in particular in operations. Drive at improving productivity, utilization of equipment and labor. We've had clients where labor is just completely out of line from a utilization factor, and they're able to save a lot of money. Again, getting the company in a controlled position. Implement lean techniques. Lean is all about waste, identifying waste and taking it out of your business. Again, a client had a second warehouse that was just convenient to have. Instead of reorganizing the primary warehouse, they went out and leased another one down the street, which meant they had to buy trucks or lease trucks. They had to put equipment in the warehouse, fork trucks, racks, and they had to put people down there to operate it, and they were less efficient, less utilized than the primary warehouse. And lean is about saying that if you have an expense that you're incurring and your customers won't pay you for it, it's waste. So you have a decision to create another warehouse, adds cost to the business, no one will pay you for that. I mean, it's just going to hit the bottom line negatively. And so you want to really look at where waste is and root out waste wherever you can find it. And lean works in all businesses. It works in the office, it works in the factory, it works in service operations. It's everywhere. Understand maintenance requirements. A lot of clients, we catch up on maintenance. A lot of the clients that we have were looked at from an acquisition standpoint. One of the things we look at is how much maintenance has been deferred and how much that costs and what's the impact on performance. So it's a big factor. You also want to implement a mindset of continuous improvement. Continuous improvement has been around for a long time, but we describe it this way. If you could get everybody who comes to work in the morning to think about their job, that today I'm going to try to make it better than it was the day before, and you do that continuously in your business, you can get a productivity hit of 10%, easily 10%, right? Productivity gain. And that mentality, if you will, makes it a lot more interesting for the people. They get a little more enthusiasm, and if you recognize and reward those that do well, it's a very big plus for your business. Okay, let's take a look at markets, products, and customers. And you want to initially reconfirm or confirm your value proposition. Who are we? What do we do? Who do we do it for, and why? And what the objective is here is to get the business slimmed down, provide direction to the sales force. Here's who our customers are. If you go call on them, you sell. Take the products out of the equation that are off on the edges, that are not profitable, don't sell well, but create a lot of inventory dollars. And so, review and reach consensus on these target markets and customers. Identify, as I said, identify profitability, and then rationalize products and customers. What should stay in the mix in terms of product in our portfolio, and who are customers that we want to retain. And we work with clients to say, you want to identify the profile of a profitable customer. Who is a profitable customer for you? Such that, identify the revenue size. One of the things you're trying to avoid here is customer concentration. We've engaged some clients where they have one customer that's 55% of their business. And we say, once you go to that level, you're no longer an independent company. You're a division of that organization. And so you want to get that down, customer concentration down to one customer is no more than, say, roughly 15%. And that minimizes the leverage that they have on you. So identify the profile of a profitable customer. SG&A, one of the favorites. This is where a lot of stuff can hide, and you're looking for, again, bringing the company back into a clearer focus. So evaluate the opportunity to outsource. Can you outsource payroll? Can you outsource a lot of the HR with a PEO? And take a look at who's on the outside that you can outsource to. Great opportunity in operations as well. Identify headcount reductions and conduct a roles and responsibilities review. In many cases, we find companies that don't have clarity around that, and what happens is they have people that have half a job, and so forth. You really want to take this opportunity to make sure everybody has an appropriate role. And then take a look at sales compensation. Is it pay for performance? Had a client about 3 years ago that paid the salespeople a salary, no incentive comp and whatever. Sales were lagging, and which is a natural outcome if you have no incentive comp. If salespeople can pay their bills, I won't offend any salespeople in here, but I spent a lot of my life in sales. Then you don't drive new customer sales, and you don't drive revenue. So you want to make sure there's a relationship of incentive comp to base pay, and also with your performance management system, people inside the organization, are they incented, if you will, to perform with bonus programs or things of that nature?